Hello and welcome to this week's episode for Spy Trader Now. I am your host. My name is Ken and our model portfolio is up 22.91% year to date. We are beating the returns of the S&P 500 buy and hold investor. Their portfolio is up 18.24% year to date. We currently have a green signal for the stock market strength. Last week, the S&P 500 gained 4.01%. We use the ETF SPY for all of our charts. Now, this particular chart is a 5-year weekly candlestick chart. And you can see that we've made a low, a high, which is a higher low, an equal high right there. We dropped down, and that is also at this point in time another low, which is a higher low, and we are now matching and meeting those old highs. On this chart here, you can see on the MACD how we are trending down this way here, which is somewhat of a bearish signal. We are still below the signal line. You can see how the MACD is still below the red signal line right there. And that so far is bearish activity until that crosses above the signal line. Now the slow stochastics is in the 80 plus territory, so that has a sign of bullishness to it, staying in this higher range above 80. Last week we did make one trade on Friday, 9/13/24. We sold to open two in the money covered calls. Here's the exact trade that we did right here. So buy to open, that should say sell to open. Sell to open, the 9/30/24 expiration date, 5/20 strike for about $42.22. Here are some of the trades that we've made in 2024. If you want to see all the trades that I've made going back for the last 3 years, you can head over to this link right here. It'll be down in the description down below. Right now, we actually have two open positions. We do have the one that I just placed on 9/13/24. I usually put yellow on my open positions, but this one here is an open position. And and I just took this trade on Friday, so I just put in the price that I ended up taking for that in the money covered call, which was $42.22. So there's no profit or no gains at this point in time. But what we do have is we do have downside protection all the way down to $520 per share. Currently, SPY is trading at $562.01. So we have plenty of downside protection to take us all the way to the end of September. Here you can see our model portfolio in blue against the S&P 500 buy and hold investors portfolio in pink. And you can see that on a comparison basis on a percentage scale. So currently, our portfolio, the model portfolio, is somewhere in the neighborhood of 23%, and the S&P 500 buy and hold investor is somewhere in the neighborhood of just over 18%. So far so good for us for our model portfolio, making all-time new highs and beating the S&P 500 by a good percentage amount. Okay, this is a 6-month duration daily candlestick chart for the S&P 500. And here you can, and I've got in here a Fibonacci retracement where we took it from this high right there to that low right there. We wanted to see on the pullback exactly on a percentage basis, according to the Fibonacci's, how much we were going to drop down. We just dropped down to very close to the 50% retracement, which is a normal pullback in a bull market. Now, under a normal bull market, you're going to have a low, a high, and then a higher low. And then theoretically, this new wave of expansion should take out that high. The reason why I took my in the money covered calls at this juncture is because we're in the month of September, and September over the last 5 years, and I'll show you coming up in this presentation how September is a terrible month for the S&P 500. All right, now we are looking at a ratio chart from the NASDAQ 100 to the S&P 500. The ratio chart is the chart that is in black when it is going up and red when it is coming down. I also have drawn in here the S&P 500, which is in dark blue. And so if you look at the ratio chart, we made a low here and then we started to come up. Oh, and I also have in here the 10-day moving average because this is a daily chart. So we made a low on the ratio chart, came up, we broke the 10-day moving average, went above it, which is a very bullish activity when you do that type of activity. But we've reached a peak here on this line, which interestingly enough was from a line that was drawn from this low to originally we bounced one low here and then came up and then immediately sliced down through it. And I drew a line on those 2 points right there. And for some reason, the ratio chart seems to be respecting that line. So we may start seeing a little bit of downside activity come down, possibly to where that low was met, and then start coming up. So we might be in for a little bit of a pullback right here, which kind of makes sense anyways, because the S&P 500 is at a top from these two tops. So it's almost like a triple top. So if I go from this top just straight across, we are very close to this just being another triple top. It's going to take a lot of energy for this S&P 500 to break through and to start making new highs. It can still do it, but it's going to take a good amount of energy to do it. More likely we're going to come down, then there's going to be a dip. That is the dip that should be bought, and then you're going to start making new highs. This is what I am thinking is going to happen, and I'm so far put my positions in place to profit off of this downturn, hence the in the money covered calls that I took on Friday's action. Now on this ratio chart, you can see that the MACD does want to come up. It's already above its signal line. Slow stochastics is above its signal line, advancing closer to 80. These are bullish activities. So, which kind of does not give credence that there is going to be a pullback. It looks like it, according to these indicators down here, it looks like we're going to start coming up like this and actually not do that pullback. But we'll see how this plays out. Again, we're in the month of September here, which is a terrible month. Okay, now we're looking at the VIX Volatility Index, or the Fear Index as some people call it. There are three ranges. Now, this line here, which rests on 20, above this line is the upper range, which is bearish. Below this green line and above this green line is what I call the low range, about 16 to 20. And below 16, you have the ultra low range, which is all bullish. And you can see we've spent a lot of time below this green line here in the ultra low range. The VIX has spent an enormous amount of time there until recently. It had that where it shot up to that unbelievable Eiffel Tower peak and then came crashing back down. But where do we stand right now? We stand in the low range. The current reading is 16.56, just above 16. So we're very close to the ultra low range. Either way, all these numbers are bullish. This chart here is telling you that the blue line, which is the S&P 500, is going to advance. That's what the fear index is telling you. It's telling you that there's no fear in the market currently and there's room for advancement. Now we are looking at seasonality for the S&P 500. We are focusing on the month of September. Going back for the last 5 years, you can see that we've had negative, in other words, not one positive month for the month of September going back 5 years. Currently, for the month of September, you are this candlestick right here, which is a monthly candlestick for the S&P 500, you are negative 0.3%, meaning that this only has to come up 0.3% for it to be a green candle, meaning a positive month. But for the last 5 years, we've closed in the month of September. Every single month, we've closed in the red, not in the green for the candlestick, meaning that from this information, there's little upside to be gained for the month of September, and there's a greater probability that you're going to come down for the month of September. That is why I took that protection of that in the money covered calls. This is the main reason why, because of the seasonality effect of how September is. October is also a poor month, and then when you jump into November and December, you have 75% probabilities that they're going to be positive months. Well, we're going to take on long positions in the months of November and December, but we're going to look for more bearish opportunities for the month of September and October. So that's the game plan and how we want to trade this. All right, we are looking at a 3-year weekly chart for the S&P 500. I've drawn in what we call a valid trend line based off of this low and this low. You can see how I've drawn that line, capturing those two lows and just going straight up. Now, as of recent activity on this chart here, you can see that from this low, we came up and made a new high, came down, broke below the valid trend line, which is bearish activity, but then found support at this level right here. Let's just draw that out. This level right about like that is where the market found support and then bounced off of that line. We came up, tagged the old high, but then had a very strong negative week of 4%. And then the last week, we just had a positive week of 4%, gaining back plus a small amount more than what we just lost on the week before last. But look where we still land. We still land on the bottom side of this valid trend line. That's still bearish, meaning that the market, this valid trend line coming up from the bottom is now going to act as resistance, meaning that there's a higher probability that you're going to come down a little bit, have some level of support, possibly above this bottom, and then come up. We'll see how this little pullback comes in, but that is the dip that should be bought from my perspective right now, from what I am seeing. That's the dip that should be bought, as long as we don't take out this low or this low, right? So we can still have plenty of room for it to come down, but I'm thinking that we're going to have a little bit of a pullback now, and I'm positioned to profit off of that pullback. Now we do have in here cycle brackets. This low represents this low here. This low has yet to be determined. So what about if this comes in, reaches a low right about there, and then comes up, coinciding with this low right here, right there? We don't know. This is all the future. We don't know exactly if that's actually going to play out, but I'm positioned to profit, as you know, off of the pullback. Let's switch over now and let's look at the daily chart. So what we're going to do is we're going to go to a 1-year daily, change our cycle brackets to 1-year daily, and let's just bring this chart down so that we can see it a little bit better. I have a target zone drawn in here on this chart because I wanted to take profit once we met those old highs because of the month of September. Now on this chart here, you can see the cycle bracket, cycle low right there, cycle low yet to be determined right in this neighborhood. Now we do have that valid trend line drawn in right here, which is this gray line right there, because I have a few different lines coming up here just to kind of see what's going on. I also have that Fibonacci where we could see that the 50% retracement right there is what was made. So now the question is, what is the market going to do here? It can still advance. It may come up a little bit and then eventually come down. So it's hard to say. All I know is that I'm positioned right now. I got gains. I was able to capture gains from that. I got that 4% because I didn't make the in the money covered call till Friday. By then the market had already advanced 4%. So we did great capturing those gains. And we have so far a great annualized return. We just want to make sure that we are protecting those returns. Okay, now we are looking at a spreadsheet in which I created for different asset classes so we could see how well they fare throughout the trading week, as well as the 11 S&P 500 sectors. So I have it broken down per sector so that we can determine the strength of the market. Now, this is how I derived at all of the information or data that's filled in here. This is how you get those numbers to populate down here. And then ultimately, we come up with a strength score. The strength score maximum number is 6. Anything with a 5 or a 6 gets the color green. So basically, the more green on the screen, the stronger the market is. Also, we want to compare last week's reading to the current week's reading. You can see that last week on the asset classes went from 44 to 91%. Incredible up week, strong, changing us from a yellow to a green signal. On the 11 S&P 500 sectors, only 2 sectors are below 5. And so that would be obviously materials and energy. And oddly enough, one of the strongest markets of the year so far is utilities. AI is having an effect on utilities because they say that there's going to be more demand for utility power due to the processing power for AI. Last week for the 11 sectors, we were at 58%. This week we are at 82%. So you can see how much strength there is in this market. So there's definitely strength from last week's action. All right, now we're looking at a 1-year chart for the 10-year Treasury yields. And that is going to be the candlestick chart. I also have in here in the black line, that's going to be TLT, which is 20-year bonds. And then in dark blue, that's the S&P 500. So where do we currently stand? We currently stand at this very low reading here of 36.5. You can see on this 1-year chart, these are very low readings. Now I'm anticipating that we're going to come up, and that's why I drew in this green line here. That has not happened yet. We are still trading low on the MACD, and we are still below the signal line, meaning that we're still going to stay on in this low activity. Well, that's generally going to be bullish for the S&P 500. The S&P 500 ultimately wants these lower rates, so these lower yields, because if you have lower 10-year bond yields, it makes it more enticing for investors to invest in equities such as the S&P 500. So the market is going to advance staying in these low numbers. Okay, guys, we're going to wrap up this video. I just gave you guys a ton of information. Now comes the critical thinking. What are you going to do with that information? Well, as of September 14th, 2024, the market summation, according to me, Ken, your friendly host for SPY Trader Now. Now that we are at the old highs, I decided to play it safe for September, and I sold 2 more in-the-money covered calls. I showed you those exact transactions that I took on Friday. Now there's nothing for me to do but to wait and see next week's action. Now, even though I say these things, the market is an 800-pound gorilla. This is the stock market, meaning that the stock market will do whatever it wants to do whenever it wants to do it. Although I have a prediction and I'm positioned to profit on a market pullback, the market could completely say, the heck with that, Ken. We are going to just go completely north and bypass everything you say. So by taking these in-the-money covered calls, what am I giving up? I'm giving up on future gains if the market does continue to advance between now and the end of September, because that's the expiration date for my in-the-money covered calls. If the market does advance, I've locked in that I'm not going to profit off of that advancement, because that's how in-the-money covered calls work. If the market goes sideways between now and the end of the month, I will profit off of that activity because I sold 2 in-the-money covered calls and I'm going to get time premium. If the market does come down between now and the end of September, I'm going to buy to close my in-the-money covered calls for less money than what I sold them for, meaning that I will profit off of that. So I can profit off of a down market. I can profit off of a sideways market. I just cannot profit off of a upward trending market if the market does continue to go up. Okay, that's it. I hope you guys got some valuable information out of this video. If you have not done so already, smash that like button down, subscribe to my channel, and ring that bell to be notified when I post a new video. I thank you and wish you good trading.